Hi, this video is going to be about the personal financial statement. And the personal financial statement is needed by almost any finance company or anybody who really looks at a loan. Um, the assets are usually listed from actually the closest to cash to the least like cash on the balance sheet, and at least on the asset side. Um, the You can actually fudge some amounts. um, Nobody knows how much cash you have at any one time. Even if you look at your statement, you can only tell at the end of your statement. um, and then the places where you could kind of fudge would be cash, savings, personal items that you have, and then other assets. Um, you have to watch it when you use. I know a guy once that used silver as an asset, and the bank actually asked to give us evidence that that exists. This large amount of silver he had. Um, so anyway, the autos and homes, real estate. Um, you're not an expert. You're not an appraiser of real estate, and you're not a buyer of automobiles. So usually in there, you can pretty much kind of guess and kind of something down, which can be a little on the high side because that's not what you do. Um, Mostly, you want to try to be pretty accurate. Um, if the business goes out of business, and they will always look back at the personal financial, because you will personally guarantee every loan that you ever get. Um, and if you personally guarantee it, they're going to look at your personal financial, and if they found out you blatantly lied on anything on the personal financial, then they can get you for mail fraud, and you could even go to jail. So you don't want to go to jail. I mean, I knew a couple of guys who did that, and yeah, they went to jail, and then the son got out before the father, so he actually called me. For I guess he wanted to know somebody in the banking world, because he was I think selling lawn care or something. So anyway, yeah, you don't want to go too far. If you do venture and you kind of puff a few items, it's like don't go too far. Anyway, the let's see, a lot of things can be checked. I mean, the banker can check the real estate. He can check the value on a car. There's a lot of things he can check on there. We're going to go ahead and look over the personal financial one item at a time. And I'm going to go ahead and actually put, actually this video is going to be like a picture-in-picture on the other video of just the personal financial statement. So I'm going to go over that from from start to finish, from the first page and the second page. I'll be using the SBA personal financial statement, which would be different from using a bank. Pretty much the same, except for SBA gets in a little more detail, where a lot of times the banks is shorter. I've seen banks be as little as 1 page, where SBA's is 3 pages, but the last page is basically a signature page. So anyway, we're going to do that now. This is where I go by take the personal financial and go line by line. The actual form, as you can see, should be, hopefully it'll be in the side of me. Anyway, at the top is just the name, the business phone, the home phone, the address, the business address, the personal address, a business type. And then you're going to have assets on the left, liabilities on the right. Assets, like I said, will be from most like cash to least like cash. And then liabilities will be from usually accounts payable, notes payable, and then installments, and then your mortgages. And then after that, it'll get into like unpaid taxes and other liabilities. So anyway, and then toward the bottom will be source of income. And then if you have any contingent liabilities, if you're a co-maker on any loans. And then they have other income, and they have a description section, which you can put down other income. So anyway, the actual first line of the assets is cash. And like I said, with cash, nobody knows what you have at any one point in time. They might ask for verification. Very seldom do I ever see the bank or SBA ask for verification. I did have, earlier in my career, I did have an SBA person in Kansas City that that had to made sure that we had the equity for him to put into the business, and we had to show that as cash, show that on a bank statement. So, but usually they really don't look at it too much. And they don't, they just look at it. If it seems reasonable, then that's fine. If you all of a sudden you have like $1 million in cash, I tell you they're going to question it definitely, and they're going to ask for verification. Next on here would be savings accounts, and that's kind of the same as cash. And usually, they don't know how much you have at any one point in time. I hate to say that, and like I said, I've hardly ever seen them verify it. Next item would be IRA or other retirement accounts. Now in this, they can't use it because your retirement accounts you can't use as collateral, so they can't really use it. But they may ask for that list or that page which shows what it's worth, but they can't really use it anyway. So therefore, nobody really cares that much. The next would be accounts and notes receivable, and these would be if you had stuff that was receivable from other people. That you had a note or something receivable from them. I don't see them ask for verification of that either. Next would be life insurance, and when they're talking life insurance, they're talking cash value of life insurance. So if you have a term policy, they don't care. They do want it in a different section to show that you do have life insurance, only because they're going to want you to put them on your life insurance policy. So anyway, as a beneficiary, so the life insurance is cash surrender value only, and it's only if you have a whole life policy which has a cash amount, and they're going to want to know what that cash amount is, and that's the only reason they want that there. And I haven't really seen them verify that either. Then you have stocks and bonds. Now, stocks and bonds. If you have any appreciable amount, I have had them ask for that listing of stocks and bonds to prove that you actually have that amount. Next would be real estate. Like I said, you're not an appraiser of real estate, so whatever you want to put down is fine, as long as it's not like, a $100,000 house that you put down for $500,000 or, something like that. And when I say, you're not an appraiser, I'm talking about you don't know if it's worth 150 or 100 or 90 or whatever. So I would always put down a high amount, not double. I mean, just of a range, a high in that range. Automobiles, like I said before, you don't really know how much it's worth. You're going to guess, and I would guess on the high amount, but only because you don't know these things. You can look them up. And that's what they kind of think you might do, but a lot of people just write down what they think it's worth. Then you got other personal property. Now, other personal property is anything you own, and that can be anything from like your furnishings in your house, your clothes. We did have one guy that had a very large amount of clothes, and everybody thought that was kind of funny because he was a banker and we didn't understand that quite. But anyway, we didn't ask him to verify that. So anyway, usually that is like your any assets that you own personally would be lumped together and put on this. And a lot of people just don't put anything down. And I said, well, always put something down because it does help your personal financial statement. It'll help your equity. And then you got other assets. Other assets could be another business you own. They could be really any other asset that doesn't fit in the other categories. And like I said, this other personal property, other assets, they're really not going to check that unless they're relying on it for collateral. And in that case, they may want to. And then on the liability side is on the right. And you go from accounts payable, notes payable to bank and others. And those are just like, what you owe. You're not going to inflate what you owe. You could put a smaller amount down, but I'd be careful on that because some of these things you can't verify. I know if you have a mortgage at a bank and he's a banker, he can probably call up a banker friend at that bank and say, hey, what's this worth? What's the loan value right now? I don't think they're supposed to do that, but I see it done. And then the installment account would basically just be automobiles. Could be boats, could be almost anything, but usually automobiles. And that's, you might as well just put down the real, what you owe on it. I really wouldn't fudge that at all either. Then you have loans against life insurance, and this would be as if you had a cash value and you took a loan against it. So, that would be important because that would be, that would reduce your equity. And then mortgages on real estate, the actual, like I said, they can probably check that, so I put down the actual amount. Unpaid taxes and on there, I very seldom ever see this on there. I don't know if just everybody doesn't owe taxes or if they just forget about it or what, but never see it on there. Other liabilities would be any other liability you have that doesn't fit into these categories. And like I said, other liabilities doesn't end up on the personal financial much at all either. And then your total liabilities, and then your assets minus your total liabilities give you your net worth. And your net worth is going to have a little bit to do with how they value your personal financial and your personal guarantee. And you will have to personally guarantee almost any bank loan, unless you get to be like a large corporation, like an InBev or something. Then they usually wouldn't, they're not going to ask. I forget the guy's name. It was Beto. I don't know if he's still there, but when they took over Anheuser-Busch, he was. So anyway, they wouldn't ask him, even if he did, they wouldn't ask him, to personally guarantee it. So anyway, you will personally guarantee these loans. I guarantee it. Anyway, then you have source of income, which would be like salary, net investments, income, real estate income, other income. And then there's a space where you talk about your other income. On the right side, you got contingent liabilities. If you co-sign somebody's loan, if there's any legal claims or judgments against you, provision for federal income tax or whatever, but I very rarely ever see this part filled out also. Usually people are doing this, they're just estimating, they're just writing it down. A lot of people don't take it, I guess, that seriously. And if you're close, it doesn't have to be that seriously. But I just really would not fudge it a whole lot. I mean, you can fudge it some on those areas like cash, probably other personal property, other assets. But I would be careful. You don't want to double it or triple it or something to where, they think you have $1 million net worth and you really only have like 100,000. This thing was ever liquidated, you could get in trouble for lying on your personal financial. Then we'll go to the second page, and the second page is basically just really rehashing things that were on the first page. You've got section 2, section 3, and section 4 and 5. Section 2 is notes payable to banks and others. They want to know, every loan you have, the balance, the current balance, payment amount, frequency, whatever, how it's secured. And then number 3 would be stocks and bonds, and they do want to know number of shares, name of security, the cost. A lot of people have these in mutual funds and stuff, so it's aggregated together, and then usually they just end up with a total value on the right. So. And then the section 4, which is probably more important than anything else, is the real estate owned. They got a space for 3 properties. Usually if your home, your residence would be on there. If you have any investment property, that would be on there. If you have a vacation home, that would be on there. If you own land somewhere, that would be on there. Sometimes people have a farm or some land they own somewhere. And that would be, then it would really, they look at, the type of real estate, the address, the date purchase, the original cost, and then the present market value, your name of the bank who has your mortgage, the mortgage account number, mortgage balance, amount of payment per month or year, status of mortgage, which is usually just current. So that stuff is pretty easy to obtain. They usually get that, and they ask for the date purchased and the original cost and the present balance because they just want to look at that. Does that make sense? I mean, if you bought this land or this property, this house for $200,000, and then you're saying it's worth $2 million now, I doubt they're going to believe that. So, and like I said, they do real estate loans all the time, so it's very easy for them to look them up. Anyway, that's about it. Now you do have section 5. It's on that second, or actually it says page 3, but it's really the second page. Section 5 is other personal property and other assets. So anything you have there. There is a pre-page that SBA started recently in the recent edition of this that basically just says, is this used for an SBA 7A loan, 504 loan? Is this used for a disaster loan? And really, we're including it, but it's kind of a throwaway page. It's not really, it's just kind of check a couple boxes, put your name on it, whatever. So it's not that important. Anyway, the next page, which is page 3 to me, but page 4 on this personal financial, is unpaid taxes. They want a description of it, everything about it. Section 7 would be other liabilities, any other liabilities you have. Section 8 would be life insurance held, and this is where they want to know what life insurance you have, and who's the beneficiary, if there is any cash value on that. But a lot of times they just want to know the actual face amount and then the surrender value. But they want to know the face amount because they also want to know if you have any liens against it, because they want to be put down as a holder of that life insurance. In case something happens to you, that life insurance will pay out to them the amount that is specified. So anyway, beneficiary, that's what they would be. And SBA wants life insurance more and more, because if something happens, especially if you're the key person, they used to call it key man, key woman insurance. So if you're the key person, they are going to try to get life insurance from you. Anyway, you're going to sign and date it, print your name and your social security number on that page. And that's it. And then they have a couple other pages that are all the federal laws and stuff that you can read. It's really boring stuff. So anyway, but that's about it for the personal financial statement. And just remember that it is, you really, you can fudge the cash a little bit. And I really shouldn't say that, but bankers wouldn't like if you said that. But I mean, I'm not talking, like double it, triple it. I'm talking you can fudge a little bit because nobody knows how much cash you have. And I really tell you the truth, I've very seldom had a bank or SBA really ask for proof of any of this, which is kind of surprising to me. I mean, I would have thought they would have. I think maybe if you get into the higher net worth people, and they may check some things out to make sure they're really worth that before they make them loans. So anyway, thank you very much, and have a good day. That's the end of the video. Remember to subscribe, because there will be a lot of really good information coming up. And you can always, if you subscribe, you can always go back in and look at past videos and things of if things that interest you or things that you have to know because you're getting a loan. And this will cover not just getting your first loan. This will cover if you've been in business for years and you're getting other loans. So, hey, if you could subscribe, and if you got any good information out of this, only you are the judge. But if you did, hit that like button, and I'll see you in the next video.